Happy weekend, hustlers and grinders. Let's have some fun. Since 2020, a handful of tech companies didn't just grow, they exploded in market value. Some doubled, some tripled, one added trillions. Today, we were breaking down the biggest tech stock value winners since 2020 and what actually powered that incredible run. Let's count them down. Quick note before we jump in. This is based on real market value growth and stock performance since 2020. Not hype, not headlines, real valuation expansion. We're not talking about penny stocks or lottery tickets here. These are real, substantial companies. Coming in at number 1, and this should be no surprise, is Nvidia. Since 2020, Nvidia transformed from a company known for gaming and graphics chips into the core engine of the entire AI infrastructure. Think about it. Data centers, AI training, machine learning, they became the pick and shovel supplier for the modern AI gold rush. Their market value growth has been insane with a massive multiple expansion. In fact, it was one of the fastest climbs to $1 trillion valuation in market history. The big lesson here? Infrastructure winners often beat the application hype. Next up, at number 2, we have Microsoft. Microsoft quietly became an AI and cloud giant, all at the same time. The growth of their cloud platform, Azure, combined with their dominance in enterprise software and smart AI partnerships, created a powerful triple engine for growth. While other companies were busy chasing trends, Microsoft was embedding itself deeper into the essential workflows of businesses worldwide. It wasn't flashy, but it was incredibly powerful, compounding, and dominant platform behavior. Holding strong at number 3 is Apple. Even starting from a massive base, Apple added an enormous amount of market value post-2020. Their ever-growing services revenue, the powerful lock-in of their ecosystem, and consistently high hardware margins kept the cash flowing in. Even when their growth seemed to slow down, their incredible profitability kept their valuations strong. The lesson from Apple is clear. Scale combined with intense customer loyalty equals incredible durability. All right, let's talk about number 4, Tesla. Tesla delivered one of the absolute wildest valuation expansions of the era. The combination of explosive EV growth, their ventures into energy, a compelling software narrative, and a huge wave of retail investor momentum drove their market cap to astronomical heights from 2020 onward. Was it volatile? Absolutely. But it was undeniably one of the fastest value growers of the period. The lesson here is that a powerful narrative, coupled with clear category leadership, can accelerate valuation in a big way, but you have to be ready for the swings. At number 5 is a company that's less talked about, but a monster performer, Broadcom. Their business in semiconductors, infrastructure software, and key exposure to the AI boom pushed major valuation growth. Broadcom may not be a social media favorite, but it's certainly an institutional favorite. The lesson? Sometimes the boring giants quietly outperform the flashy, headline-grabbing names. And finally, at number 6, we have Cloudflare. Cloudflare surged on the back of internet infrastructure, cybersecurity, and the growth of edge computing. While it's smaller than the mega-cap companies on this list, it was one of the faster percentage growers in terms of tech value since 2020. The lesson repeats itself. The picks and shovels of our digital infrastructure just keep winning. So, are you noticing the pattern here? The big winners since 2020 were primarily infrastructure providers, AI enablers, cloud platforms, semiconductor leaders, and dominant ecosystem companies. They weren't the ones chasing trends. They were the ones building the backbone that the trends run on. Now here's a very important reality check. Past growth does not guarantee future returns. High growth often leads to higher expectations, and with higher expectations comes higher volatility. Even the biggest winners can and do correct. If you study where market value growth comes from, you start seeing the patterns emerge: platform dominance, infrastructure leverage, and recurring revenue models. That's where long-term value tends to concentrate. If you want smart, no-hype market breakdowns and practical investing strategy, make sure you subscribe. We focus on the math, the discipline, and real-world execution. Stay safe and keep hustling.